What's the deal, everybody? Yusuf Smith here, real estate investor with information for first-time home buyers and real estate investors. Today, we're going to talk about your best chances for a successful refinance. Okay, so today we're talking about refinancing. Why would you want to refinance? So here are some reasons why you would want to refinance. First is maybe you want to get a better interest rate. To get a better interest rate means that over the long term, you're going to pay less money. So of course, you want to pay less money on your mortgage. Secondly, lower monthly payments. Even if you are a real estate investor or a first-time home buyer or a home buyer in general, you want to get lower monthly payments. And lower monthly payments just means more money in your pocket. That's a reason to refinance. Maybe you want to pull out some cash. Do a cash out refinance. If you're a homeowner, you can pull out some cash and maybe you want to do a kitchen remodel, a bathroom remodel. Maybe you need some repairs done to the home, HVAC unit, whatever. You can use that cash for that. And if you are a real estate investor, of course, you want to pull out that cash so you can buy more properties. That's what we do as real estate investors. So a cash out refinance is a great way to get that done. Get a loan in your name. So maybe someone gave you a property. Maybe you inherited a property. You have the title and the mortgage is still in the original owner's name, that family member. You want to get total control of that property. You can do a refinance to get the mortgage in your name and out of your relative's name. So that is a good reason to refinance, to get the mortgage in your name, and you will have complete control over what happens with that property. And then lastly, to get better terms. If you are in, say, an adjustable rate mortgage, which means after so long, your interest rate will go up, your mortgage payments will go up after so long in that loan. Maybe you have a 5 or a 7-year adjustable rate mortgage, which means after 5 years, 7 years, your payments will change. And if interest rates have gone up, your payment will get higher. So you may want to refinance that into a fixed rate so that over time, your payments will stay relatively the same. So maybe a 7-year mortgage into a 30-year fixed rate mortgage. That's another reason to refinance. So now we have our reasons why we might want to refinance. Let's look at the 3 areas that we must concentrate on to have a successful refinance. The first one is your credit score. The second one is debt to income ratio, and the third one is reserves. So let's go into your credit score. What's involved in getting a higher credit score? Well, to get a higher credit score, there are 4 things that really, there are 3 very important things, and the fourth one I'll go over also. The first one is your debt to available credit, so your credit utilization rate. How much of your available credit are you using? So let's say if you have a $1,000 credit card limit and you are using $500 of that $1,000, you have a 50% credit utilization rate. This is very high for lenders. They want to see 35% or less. So if you have on that same $1,000 credit card limit, you're using 3,500 of it, so you have a running balance of 3,500. Now you look better because you're at 35%, not at a higher 50% ratio. So you want to keep that credit utilization rate lower than 35%. So if you're at 0%, your credit score is going to go much higher. So you want to look out for that. The second important thing in your credit score is on-time payments. Okay, how are you paying your bills? Do you have a 30, 60, or 90-day lates on your credit report? Lenders do not want to see this. They do not want to see that you're not making your payments on time. This hurts your credit score, and lenders don't want to see that. So make sure that you are making on-time payments. So keep your credit utilization rate low, number one. Number two, make on-time payments. And then number three, the length of your credit history. How long have you been a responsible credit user? Do you have credit cards that are 5, 10 years that shows that you've been using these credit cards, you've been paying them off on time? Do you have loans that you've paid off? Do you have a mortgage that you paid off or that you're paying successfully on for several years? So it's the length of time that you've been using your credit. That is very important. And another thing that's pretty important, not as important as the first three, but there are inquiries on your credit report. A lot of inquiries over time show that maybe you are wheezing a bit, maybe you don't have enough money and you are looking for more credit. And this is a red flag to lenders. So make sure that you try to keep your credit inquiries low. There is an exception to this, which I'll go over in a little bit. But those are the things, trying to get your credit score. So now let's look at your debt to income ratio. Debt to income. So also, how much debt are you holding on to? How much debt are you using of your income? So let's say you have an income of $6,000 a month and you have debts each month of $3,000. So again, you're looking at 50% debt to income ratio. And lenders do not want to see 50%. So you need to get, if you're at 50%, you got to try to work on getting that down lower to 35% or less, the debt to your income. That is very important. And then lastly, the reserves. How much in reserves do you have when you're going to refinance? And your reserves, usually lenders want to see at least 2 months of reserves of your mortgage payment. So if your mortgage payment is $1,000, is going to be $1,000 a month, the lender will want to see that you have at least $2,000 in the bank, $2,000 or more. Obviously, the more that you can have in reserves, the better you're going to look when you are refinancing. So these are the things that you want to look at as far as getting a successful refinance. So what are some places? Where should you go to get your refinance? Now, if you are on the borderline and you're close to some of these, your credit utilization rate is a little higher, maybe you have a little higher debt to income ratio, and maybe your reserves are right there on the border. Even if not, you still want to look at small local banks and smaller credit unions. And when I say small local banks, I'm talking about that bank that you drive by that you don't even notice. Now you want to drive by and look at some banks and see if there are some banks that you haven't noticed, the smaller banks. And so I'm not talking about Bank of America, Wells Fargo, Chase, these bigger banks. I'm talking about smaller local banks. You will have your best chance there. And then if you are more of a credit challenged, then you need to look at private lenders, and lastly would be hard money lenders. Now, I've used all of the above. Hard money lenders, you have to really be knowledgeable about, more knowledgeable about the loan that you're going into, because they're going to charge you a higher interest rate. And you need to be very careful with hard money lenders. So I'm going to leave that for sort of a last resort if you need to do a refinance. But private lenders who are not necessarily hard money lenders can also be of help. Maybe you know of some investors in the area, or some relatives, or someone who's able to help you refinance out of that mortgage. That would be an option as well. So small local banks, small credit unions, that's where you want to focus on. And Any of these options should be something that you should be looking into. Also, do not stop at just one lender. So that is a mistake that a lot of people make when they're trying to do a refinance. You talk to the first lender, maybe the first lender says no, and then you just stop. That's Don't do that. Continue on. At one point, I talked to about 15 lenders, and I was told no 15 times, and I got to the 16th one, and they said yes, we can do that. So keep talking to lenders. Your best thing is to talk to them first before they run your credit. Get an idea after you've listened to this video with some information. Talk to them first, see what their requirements are before you actually have them pull your credit, because obviously when they pull your credit, it runs an inquiry on your credit report, and you want to try to avoid too many inquiries on your credit report. Before, I mentioned there was an exception. Now, if you are certain that you're about to do this refinance, within a matter of about 2 weeks, you can have as many inquiries on your credit as necessary. So they're all treated as one inquiry. So let's say you talk to 10 different banks, and you have 10 different inquiries on your credit report. Well, they're going to be treated as one inquiry. They're not going to hurt your credit score as if they were 10 different inquiries, because lenders and the credit reporting agencies know that you're probably not going to be buying 10 different properties within 2 weeks. So they know you're kind of shopping around, and that's okay. So feel free to shop around within a period of about 2 weeks without any harm to your credit score. But again, make sure you talk to the lenders first, find out their requirements, and then put in an application and talk to many different ones. Don't stop at 1, 2, or even 3 if you don't get the terms that you want, because there are different lenders, and sometimes they have different requirements. Each lender has a requirement that they're looking for their particular portfolio. So you need to try some different lenders. So that's it as far as refinancing. Make sure that, again, that you get your credit score, look at your credit score, look at your debt to income ratio, and then lastly, look at your reserves that you have as far as how much money you have when you're going to do your refinance. So I hope this helps. If any of this information, if you're able to use this information and get your refinance done, or get your credit score higher, or however this might help you, please let me know. And if there's something else that I missed or that you would like me to address in a future video, please let me know that also. You can find me on Instagram at Yusuf A. Smith. Please subscribe to my YouTube channel, Yusuf Smith, Facebook, LinkedIn, wherever you can find me. And I will see you guys in the next video.